Yeah, BitBrain.
Ooh, we're back.
Come on. Episode 9.
We're
baby.
back. We got
Episode
longer
9.
beards, longer hair.
Well, Mariano's not coming in from the White House. So.
Oh,
No,
yeah,
no,
new
no.
background.
I think that it was affecting the video quality, so I put it.
Dude,
This
I
is,
like your background better. It's a much better. You got a Fender Telecaster there. Very nice.
Is that your bedroom, Mariano?
That's my bedroom, and that's my fender, and that's my sword that protects.
I was gonna
me at
say
night.
you got a samurai sword there, dude.
Right above the bed. Smart.
That's right. Yeah. Hope you guys don't have earthquakes in Buenos Aires.
You know, that's one fear that I had, which was, why if there's an earthquake and it slides open, it cuts me off.
Exactly.
It's really, right?
You know, it's like that farmer's commercial. You know, like we've seen it all because we've seen it all kind of thing. You know, so you never know. Man. You should probably get insurance against that. You know, in case
yeah. Well, what's insurance gonna do when I have my head cut off?
You know, for your parents.
So that we can claim it, dude. We can come
exactly. Come on, I mean, serious. You know, aren't we your boys? Come on, dude.
Let's do it, guys.
Buddy. Yeah. What up, everybody? Hello. How's everyone doing? Happy whatever day it is, whatever day you're watching this. We are back, episode 9, and we got a lot to discuss because there's been a ton going on in the crypto space and just in general, but a lot of stuff going on. In fact, a YouTuber actually mistakenly displaying his seed phrase on a live stream. Hopefully you won't catch any of us doing that.
His private key?
His private key, yeah, for like 50K. So let's actually take a look here. So this dude, Guillermo, I'm going to do this, Guillermo Reno, YouTuber, Ivan Perdu Todo o Dinero.
It's perfect.
Can you tell that I speak Portuguese? Is that even Portuguese?
So first of all, a big disclosure to all the people in Brazil and in Portugal for the crimes we're about to commit.
Yes, I think I already committed them. There's probably like 3 or 4 felonies that I already committed on one sentence. So what? I actually, you know, Mariano, you got to do this because yeah.
So what it says is that a YouTuber lost all its money for exposing their set of private keys while he was on a live stream, and it talks about that self-custody is very important and you should never store your own private keys on your own local computer. But good news, rumors say that he actually, there's in English. Rumors say that he recovered a good part of that money. He did. Hopefully that's the truth. Yeah. If you see the clip, I saw the clip. It was very unfortunate. And what happened, put the clip, maybe we can all see, is that the guy, it didn't store its private keys, it stored his MetaMask private seed. And he was checking some documents, right? And he saw that. And if you tap there, he opened it. He realizes his mistake. Brutal. He closes it. And what he's saying in the video is like, I made a big mistake. I fucked up. I need to change this ASAP. And in the next 3 minutes, that's where it happens. And terrible. And then he goes on for the next 5 minutes, a little crying because of what happened. And begging the people that got that.
I would have cried too, dude.
So the total amount was around 2.3 Bitcoins, I think it was. So it's around $50,000.
Yeah, lost all his money, right? His life savings, pretty much.
Yeah.
Look at the bright side. At least he'll become a meme afterwards.
Yeah. In fact, look, if you scroll down on the posts, on the comments, there are already memes. Scroll down a little more. It's poor guy, but it's yeah. Has this ever happened?
Chardado.
What's that say, Mariano? I want to know what this says.
Hey, relax for storing your private keys inside your computer.
Yeah.
Yeah. So what I like to do is, store part of my private key in one place and part in the other place. So if anyone ever gets a glimpse in that, in that context, then at least they only have half the words. They can't do much with that.
I think this brings up kind of an important thing, though. It just stresses again the importance of security. seed phrase, passphrase security, right? You really cannot, afford to really not have tight security in this space, right?
Yeah, but what does tight security mean, right?
Well, number one, definitely not putting your seed phrase on a live stream. That's or at least having it up where you can actually reveal it. Right?
I think the fact that it was on his local computer in full is bad.
It also shows you that like crypto is in a way like a dark forest, in the sense that, think about it, there is one live streamer, right, that for 1 second exposed its private keys in Portuguese, and somebody was watching that, and somebody was maybe not expecting that opportunity, but that opportunity like arises, and that person captured it. So this really proves you that if you make one mistake, like someone is out there waiting for that to happen and waiting to capture that opportunity.
How many followers did he get out of that? I bet his page blew up.
Yeah,
next time he shares his private key.
I'm not sure it's 50,000, but like really, it's really insane. 1 second that guy put on the screen, and he was immediately after that, he was immediately trying to transfer the coins to another wallet, but it was too late. Like, how fast are all these hackers?
Insane. I wonder if that YouTube video that he did will share fast enough that he can monetize enough to cover the 50 grand that he lost. Maybe YouTube can pay you. Maybe he'll earn enough in views that he'll get paid back.
He's got to pop up the channel and like use it to his advantage, right?
Or maybe we should do that. We should put like fake private keys that we flash for 1 second, right?
Yeah.
So people will be like, oh, we need to.
We have to do this marketing ploy. It's the best, obviously. That's wild. But,
hey, we've been struggling to get views. Like this guy in Portuguese is getting all the views. So maybe starting from this podcast, we need to expose our private key.
Who wants to show their private key?
Or we expose one word of the private key per podcast.
Every episode.
The first word is rock. And then
1, 2, 3, not it. 1, 2, 3, not it. Well, BJ, I gotta say
we'll
something.
We'll expose a combination of our private keys, so
I gotta say, VJ's looking mighty fine in that shirt of his. I don't know, man. It's looking quite good there, my friend. What's this VC3? What's that?
Oh yeah, VC3 is a decentralized venture capital that we are part of. We had a meeting here in Puerto Rico where we had a in real life summit, and this is the T-shirt that everyone got. So nice. I wanted to have something that is really bright and ugly, and this is the one that I could find really quickly.
It's very Tommy Bahama, dude. I like it. I like it. Is that where Jules there for that?
Yeah.
Awesome.
Dude. What are our T-shirts? Where is the BitBrain T-shirts?
Oh, the BitBrain T-shirts. Well, we're gonna get our swag. They're coming. Episode 50. We'll get swag.
Okay. Can we give some swag away for people?
Yeah, we'll put our private keys on swag and we'll sell it.
No, let's do a swag when we hit episode 50.
50.
But whoever is commenting from now on, they get put into a lottery so that people are incentivized to comment, and we can pick someone random for giving a swag away at the 50th episode.
I like it, BJ. Make sure everybody's like, commenting, and subscribing. So make sure you do your duty, right? Get us the algorithms. They love that kind of thing. So, all right, let's jump into the next topic, guys.
I wanted to address the password stuff a little more, actually, like the security. It's all about choosing your own adventure. So, people hear security. It's like, what does that mean? And it can mean so many things, right? You could store your private key in 10 different ways. You can put one word in all these different places. You can put half of it in a safety deposit box, half of it with your parents. Even then, like, what if one half disappears for some reason? You got to have multiples of that half. You could tattoo 2 words on your lower back and then have the other 10 words out in the open, depending on if you have 12 or 24 words, whatever. But that's why I say choose your own adventure. You can think of different layers of how you can hide your key but yet always make it accessible to only you, and make it so that the parties who do have your key, if you're sharing part of it, don't collude. right?
You could have 12. You could have 12 children and tattoo one word on each child.
Yeah, and then chase them around.
Or if you want to increase security, have 24 kids, right?
Yeah.
I love it.
But you should also not name them like regular names, because I'm sure there is someone like already checking for that. So one needs to be like, I don't know, sofa, for example.
Yeah,
Hey,
the next
what
one-
Michael
like-
was talking about is essentially sharding, where you take bits and pieces of the private keys and being able to distribute. There is always a balance between security and convenience, right? The higher the security that you have, the lesser convenient is going to be. Meaning that if you are going to be storing gold, right, it's you store it in Fort Knox, which is a very secure place. And these days they don't store gold there, but it's very secure place. But in order to get in there, like now you have to go through security. It's in a vault. It has some bunch of security there. You have to open it to get to the gold. So it's not very convenient to be able to get there if you want to reach it right away. So similarly, you can have very high security. You can have like hardware wallets, which is a minimum that we recommend. Everyone should be having a hardware wallet. The private key should never be exposed and stored digitally in a computer. Having something like a hardware wallet helps with that. So yes, it is slightly more inconvenient, but it's totally worth having a hardware wallet for the for less than like $100 or so. So if you're serious about crypto, meaning if you are storing even a single-digit percentage of your entire net worth, then highly recommend hardware key. So that is number one. Number two is that even if you think that you are an expert in the space, always be very vigilant. Probably everyone on the podcast, including me, I have a master's in computer science, understand about how the encryption works in cryptography, and I've made some mistakes in terms of how these keys were stored. So you can make it super secure and make it inconvenient, or if it is very convenient, which may not be that easy. So it is a balance, but at a minimum, you need to have a hardware wallet.
No doubt, BJ.
Yeah,
Absolutely.
I tend to learn the hard way. So I have 12 Bitcoins locked up on chain somewhere that I'll never get until quantum computing becomes a thing.
And then
I think it's
they're
important.
gonna not be worth anything, right?
What's that, Mariana?
And when never like quantum computer is open, probably Bitcoin, I don't know, will change its way. No.
Right. I agree.
Well, VJ, I appreciate you kind of giving that explanation on sharding. I think it's absolutely important that everybody really, take security very importantly. And regarding sharding, did some this morning after my morning coffee. So it's great. Next topic. Next topic is on the Grayscale victory against the SEC. I think do we call it a victory, guys? SEC clears a path for spot Bitcoin ETFs. So the ruling, which was, a couple days ago, increases the likelihood of SEC might approve all Bitcoin spot ETF applications together. We'll see. So in the article, Grayscale, most of you guys know who Grayscale is, which is the manager of the Grayscale Bitcoin Trust. They've secured a second landmark win for the crypto industry against the SEC following Ripple's favorable ruling last month. On Tuesday, SEC must review its rejection of Grayscale's attempt to convert GBTC into an ETF. And then the important part is the ruling likely clears the path for a spot Bitcoin ETF and increases the chances that the SEC might approve all the current applications together. What do you guys think about all this? Is it as landmark as is proposed here, or what do you say?
Okay, so this is one step. It's a multi-stage process. This is the first step. And let's understand why Grayscale is doing it and break down what SEC ruling actually happened. So Grayscale, currently, it's operating as a trust. What it means is that there is a Grayscale trust that holds all the Bitcoin, and the Bitcoin that is being held in the trust has a value. They make shares of the trust, and the shares are floated independently. And what has been happening is that because of that legal structure, it's traded as a trust, there is not an easy way for being able to redeem the particular trust shares. Okay. So if you have a Grayscale GBTC share, the only way that you would be able to redeem it is if you go and sell in the market. Because of that, there is a huge difference between the net asset value, which is the actual value of the assets that are stored in the trust, and the value of the shares that are being traded, the market cap. And the difference was almost 40%, right? Meaning you're getting Bitcoin for a 40% discount. And the only reason this discrepancy of 40% exists is because of the way that they have structured it as a trust. Now, what Grayscale wants to do is they want to convert it into an ETF, right? What does an ETF mean? Say, for example, you have a S&P 500 ETF, and the S&P 500 is ETF SPY. If you have an SPY share, even if you have one share, there are certain custodians wherein which if you go to the custodian and give this one S&P 500 share, they have to give back or redeem all the 500 underlying shares from underneath it, right? So if you have one share, you go to the custodian, you give them that share, they give you back the fractional ownership of 500 individual stocks across all of the S&P 500 companies. And it also works the other way around. If you go give them the 500 shares of different companies, they'll give back the SPY. So it works both ways. And what then it allows is that there won't be much discrepancy between the actual value that is traded at and the NAV, right? It will be at par, because whenever one of it goes above, then market makers will come in, arbitrage players will come in and bring the arbitrage back up. So the price of the asset will be almost same as the underlying value of the shares in that particular company. And that is the main reason what is happening with GBTC or the Grayscale Bitcoin Trust is they want to convert it into an ETF, which will make the creation and redemption of those shares easier. So that is the background of what's happening there.
Well, and I think that's a big deal, right? It's massive. It's absolutely massive for the space. But the problem is if you were excited about that, then the next day the SEC says, hold my beer. And they say they're going to delay the decision on the Invesco, Wisdom Tree, and Valkyrie Bitcoin ETFs. So now we've got some forward momentum, and now the SEC says, all right, we're going to pour some cold water on this. I don't know. It just feels so absolutely frustrating that they keep doing what they're doing. What do you guys think about that?
Yeah, the SEC is not given up its fright. If you look at the market reaction, I was thinking, we would have had an even explosive move, because the moment we have Bitcoin ETF approved, we have already talked about it, getting a Bitcoin ETF is inevitable, right? But I don't know when the timeline is going to happen. It's going to happen in the next year or next 2 years. I would say by next 5 years, if you don't see a Bitcoin ETF approved, I would be super surprised. So somewhere between next year and the next 5 years, we are going to have a Bitcoin ETF approved. That's guaranteed. When that happens, my prediction is that we're going to see the price of Bitcoin double, because for every $100 million of new money coming into the space, the price of Bitcoin increases by 10%. Again, this is not hard and fast rule, just approximately. And there is an estimated maybe $1 billion to $1.5 billion of money that is waiting to come in. So I was expecting an even more reaction. And the reason why we haven't seen the reaction, in my opinion, is because the SEC is going to continue fighting, right? They're not going to go down so easily. The judge had some really strong wording as to the rules that SEC makes is arbitrary, right? If you already had BITO, which is another Bitcoin ETF, but it's traded on the futures market approved, how is that BITO any different from this Grayscale Bitcoin ETF? And they are trying to do the same thing. So this is a very interesting ruling. Again, it's one step in a 1,000-mile journey. We are going to see the impact of it in the next few months, because we're going to see all the other Bitcoin ETFs. Yes, Dominic, you're right that the SEC delayed the judgment, which is expected. They had 240 days. And at the same time, we are going to see the impact of it over the next few months.
Yeah, we have Kathy Wood's ARC. I think the deadline for their ETF is January 4th. So they're going to have to decide. And if they decline that ETF, then they're declining Blackrock's as well. So they probably won't do that, but we'll see. But yeah, I agree. Like, has to be an ETF is just a matter of when. Otherwise, they're leaving too much money on the table, right? As this market grows.
I mean, I just feel maybe I'm putting on my tinfoil hat, but the fact that BlackRock actually submitted an ETF for approval and the amount of political will that they have, I don't see that getting denied, like in any circumstance. So if that, I just find it very interesting though, if that gets approved, which inevitably I feel that is an inevitability, then in lieu of not approving all the other ETF applications, what does that mean, right? So, it's just
will it be the first time that someone says no to BlackRock?
Yeah,
precisely. Yeah, I mean, they kind of get everything they want. I mean, what are they batting, like 1,000?
Yeah, but, so I think it's very interesting if we do like an analogy that making a Bitcoin ETF is harder to get a drug approved by the Food and Drug Administration. And in a way, like a lot of pharmaceutical companies are very, very powerful, and they still fail to get some of their treatments approved in the United States. I remember there was a very famous one that was very approved in Europe, and it didn't get approved in the United States. And it turned out years later that it had a lot of secondary effects. But it's insane how one agency has so much power.
Correct. Yeah, very just an enormous amount of power, and not necessarily it's not for necessarily the benefit of the people, right? It's for guarding those oligarchs that already have their handle on their industries, unfortunately. So, but the next topic is actually it is a continuation of this, which is Bitwise has withdrawn their Bitcoin in Ether market cap ETF applications. Bitwise was among a number of asset managers looking to launch a spot Bitcoin ETF in the US. So in an unexpected turn of events, Bitwise submitted a request to retract its application for its Bitcoin and Ether market cap weight strategy ETF, initially filed back on August 3rd. So while the market sentiment turned bullish following Grayscale's SEC victory, Bitwise appears to be reassessing its strategy. They were probably actually like, well, okay, BlackRock just filed. We're not getting approved. All right, let's hold back. So what do you guys think about this? Is this newsworthy?
So Bitwise withdrawing, there might be any number of reasons. A lot of the Web3 funds facing a challenging time because of the performance last year. The entire industry was down. But them withdrawing one of their applications, I don't think there is much to read into it. And going back to BlackRock, Dominic, what you're talking about, BlackRock has a approval rating of 575 to 1, right? So they have applied 576 applications for ETFs. 575 have been approved. Only one has been declined, and it has been the one that was declined was for arbitrary reasons. Not arbitrary reasons. It was because they were trying to do something entirely new. They want to have some illiquid assets that is going to be where the NAV is going to be calculated on a daily basis. That was very difficult to even understand. So that's why that got denied. So I don't think that Bitwise one might be because of something that's happening within the company. That's not an indication of the entire industry.
Well, I thank you for saying that. I was completely incorrect on saying that they were batting 1,000. It looks like they're batting 0.9999998.
Yeah.
So, good Lord, I did not know that figure. That is a statistic worth remembering and spreading. Wow. So, what is that? What was 575 to 1 or 579 to 1? Is that what you said?
Yeah, 575 to 1. They have gotten 575 ETFs approved. And I don't know if there is anyone in the industry who has gotten more ETFs approved than BlackRock. I might be wrong on this. Like, if you find some other company, please type it in the comment section for letting us know if there are other companies that have more than 575 ETFs approved.
Very, very interesting. I'm certain that their competitors love the fact that they get preferential treatment.
Yeah.
So Yeah, it's good to have political capital, right? In addition to what 30 trillion under management is what they have. What's their figure? You probably know this off the top of your head. 30 trillion, something like that. That they control.
Something in the order of trillions. And it's a number that's so huge that, we just throw these numbers around, the trillion doesn't even, you can't even imagine, right? Just to give an indication, when we say, hey, you have 1 million seconds, right? If someone says, I'm going to give you 1 million seconds, can you guess how long 1 million seconds is?
What is it, like 12 days or no?
Yeah.
Is it 12 days?
Yeah, good job, Dominic. Yeah, it's about 11 and a half days. Whereas if you say 1 billion seconds, right? How long do you think that is?
32 years?
1,000 times more than that. So is it 3.5 years?
Yeah,
something like that.
Yeah, no, it's Michael is right. It's about 33 years, right? Wow. So there's a huge difference, right? It's like saying, hey, wait for some time, waiting for 11 days, right? It's going to go by in a blink of an eye, whereas 33 years is different. Whereas a trillion seconds, right? Trillion seconds, 33,000 years. So the difference between million, billion, and trillion is so vast. But BlackRock manages in the trillions of dollars, which is insane. It's an amount of money that it's very, very difficult for us to even imagine and understand.
Well, and I don't know
how many seconds do all of you guys have left in your life? Do you still have 1 billion seconds?
Hey, I'm not promoting this necessarily, but I just got this book, so I'm excited to dive into it.
That book gives you 100,000 more seconds.
It'll give you 100,000 more seconds, man. Yeah, absolutely. So, well, that I appreciate you providing that perspective, VJ, because what I find interesting about that is that so BlackRock's got they manage let's just say 13 trillion. I think that was a figure, and I don't quote me, but it's an enormous amount of capital, as VJ just mentioned. Okay, so let's say they manage $13 trillion. They're managing your money. They're essentially managing. They have what's known as assets under management, right? It's not all their money, but they're essentially wielding the power of that money. In other words, they have the governance control of all of those assets. So they sit on the boards of the companies of which they hold in their assets and their asset mix. And so they're the ones that are also, voting, using your shares to vote for you for their own benefit, right? So there is a huge kind of disconnect on what maybe you want for the directive. Like, let's say you have, I don't know, $100,000 worth of shares in your 401k that BlackRock is managing. They're voting on behalf of you on those shares, with or without your knowledge. So that's a huge, huge deal that most people don't really understand. So nevertheless, with this not necessarily a topic about BlackRock on this presentation or on this podcast today, but it is something I think it begs, for people to start questioning. So next topic is Robinhood bought back Sam Bankman, or I'm just calling it SBF stake from the U.S. government of $600 million. I'm just wondering if we could. Yeah, I'm just wondering if we can get this guy out of the news already. Let's just kind of throw some handcuffs on him and throw him in a hole somewhere and just forget about it. But, the purchase of 55 million Robinhood shares have been expected following approval for the company's board in the U.S. District Court. So let's see, Robinhood announced the purchase of more than 55 million shares. According to August 31st blog post, they purchased 55 million shares, roughly 606 million, following the filing of the U.S.
Slow down, Dominic. Slow down.
Oh, man. Hey, man. People like to read fast.
I don't know what you're saying.
The shares originally held by SBF and FTX co-founder Gary Wang through Emergent Fidelity. I think that's the name of their holding company, was seized in January. The purchase has been expected. Robinhood board of directors announced the approval of the deal in company's fourth quarter filing. Said the Southern District of New York approved the purchase free and clear of any claims, interests, liens, and encumbrances. So what does that mean? Does that mean that essentially he gets the $606 million to be able to pay for his legal fees, or do any of the enormous amount of people that he owes actually get a claim on those assets, VJ?
Yeah, so we need to understand a little bit of history of what has happened. So what happened was that last year, Sam Bankman-Fried bought about 7.5% equity in Robinhood. And the way they financed the deal was interesting, right? So they had another hedge fund called Alameda Research. So they pledged the assets in Alameda Research and borrowed money against it and used that money to be able to buy this Robinhood shares. And that Robinhood share was now held as part of the bankruptcy court, right? It's one of the assets that is held, which ultimately needs to go back to all the people who had assets that were traded on the FTX platform. So that's how they got the funds. And the bankruptcy court, might have decided that rather than holding on to this Robinhood shares, they're going to eventually sell it anyway to be able to make the customers whole, or maybe pay them pennies on the dollar, whatever can be recovered from it. And Robinhood might also said, hey, give us our shares back. We'll buy it from you for cash. So something happened there to be able to buy back the assets that was held in the bankruptcy court. And I'm not sure about the entire legalities of being able to do that. People tried doing that for the Bitcoin that was held in the Mt. Gox exchange. And wasn't very successful because they knew that the Bitcoin case was going to go for a long time. And the price of Bitcoin, right, went from, I think, $150 all the way to 20,000, back to 3,000, back to 60,000, and now at 25,000. So the people who have those Bitcoin from back when Mt. Gox went under, right, they have hugely appreciated value if it is going to be in Bitcoin. But if they have it in cash, it may not have the same amount of appreciation. So something like that might be happening in this particular case.
Anybody else want to touch this? Throw their hat in the ring. Okay, so we can move on from SBF then. Good, fantastic. So NFT wise, Bored Apes are suing the Material Girl, Justin Bieber, and Sotheby's, seeking as much as $2 billion. Wow, what's going on here? Okay. So let's see here. It looks like one buyer purchased over 100 of the tokens in a single auction for a total sum of $24 million in September 21st.
I was at that gallery in Decentraland looking at those apes that he bought.
Really?
Yeah.
Okay. Do you want to?
At the Sotheby's building inside of Decentraland, they were hosting all the apes, and they had an interactive jungle themed museum style showing, and then I guess this guy was super intrigued and bought them all.
Okay, so looks like here's so they've decided the Bored Apes are suing 30 celebrities, including the likes of Madonna, Justin Bieber, and Crystal. Okay, along with Sotheby's auction house for misleadingly promoting ape NFTs, alleging manipulation and lack of disclosure of their relations with ape creators Yuga Labs. Interesting. So
it's not the Bored Apes, it's not Yuga Labs suing, it's people who bought the apes, just to be clear. It's kind of a slightly misleading headline. Yeah, I mean, these people, it says in this article that everyone who bought an ape had an expectation of returns and gains from doing it, but I don't think that's true. I think only the people that are suing really had expected that. And of course some others as well, but a lot of people I think are in there for the community, which just means, you get invited to parties, you get to rub shoulders with other people that have money, they do business deals, they make partnerships, they enjoy the camaraderie. I think they're doing a party in Hong Kong this year in a few months. And a lot of the guys that have these things wouldn't sell them for anything because of the connections and what comes from being part of this little fancy club. But the people who are suing, who bought the peak, it seems like they were misled by these celebrities, but it's just like going to the casino and then a year later suing the casino because they took the money.
Isn't that kind of the nature of things nowadays? We lose money and we need somebody else to blame for our poor decision. Not
kind of a
responsibility,
case, in my opinion.
Yeah. I mean, I kind of feel like I want to buy an ape now just so I can say I sued the Material Girl, but don't need to go down that road. But so Yeah, I don't know if there's anything else. Mariana, do you want to touch this at all? Do you have any comments on this? No.
Not sure. No.
Okay.
Yeah, it shows the human kind of psychology. If people make money, then they think, oh, I'm a goddamn genius. I invested in it and made so much money, right? But if they lose money, they're like, oh my God, you material girl, you Justin Bieber, you are the cause for my loss in of this particular money that they invested. So lack of personal responsibility, I guess.
And I mean, just let's just say, this is not financial advice, living investing in the realm of crypto, but good Lord, just take some responsibility for your actions, for your actual investments. Don't put your money into something just because one other person is promoting it, whether it's us or someone else on the YouTube. That's no reason to go YOLO all of your assets into an NFT or into any sort of asset class. That's one of the things we stress the importance of nonstop ad nauseum is asset allocation. How you actually allocate your assets is of supreme importance, because you got to diversify your risk of multiple different assets, because you may not be right? The person you're listening to on YouTube may actually be, selling his bag to you as you're buying. That's why he's shilling it to you so hard. So, develop a sense, use some personal responsibility, and take responsibility for your investments of your assets.
And look at the bright side, look at what you learned from taking on that endeavor. I like to say I spent a lot of money on NFTs, so you don't have to, learning the ins and outs of it, and that's just a benefit that I have insights that no one else has from going into that. And it's not about, making money all the time. So yeah, I think you're absolutely right, Dom.
Awesome, man. Yeah. Well, speaking of, people being in hard situations and, the economy kind of tightening up a little bit, is we just noticed that interest rates on used car loans are nearing 15%, and credit card debt rates are above 25%. Now, I always thought that credit card rates were, I thought that was kind of standard. Maybe it was 21%, but nevertheless, it's I think the big part here is 15% on a used car, whereas a few years ago, maybe you're talking 7-8%, maybe even 6% if you have decent credit. Meanwhile, the 30-year mortgage, which is likely the biggest expense of this, has doubled too, right? So we've seen, I think DJ's talked about this in past calls, the fastest rate of interest rate increases in history over the last couple of years. So we're seeing the impacts of that now. Now, necessarily, it's important to understand too that the federal funds rate is not directly tied to the cost of capital with regard to auto loans or mortgages or anything like that. It's actually tied to more of the 10-year bond, the 10-year Treasury bond. But nevertheless, they can be indirectly influenced by one another. So, anyways, anybody want to touch this on the impact of this and what's been going on here?
So interest rate is increasing, right? And that's we're going to have the Fed funds rate. That is how banks are able to loan to each other. And then when banks are loaning that money out, they loan it out to businesses, right? They loan it out to people. They loan it out to other banks, also smaller regional banks, who in turn keep loaning the money out. And that's how the banks make money. 15% is probably historical high. I'm not sure about the actual rate. In the 80s, we had a pretty high interest rate. And maybe someone can look up the actual rate in the 80s and 90s. The 2000s was very low. Typically, you don't see used car rates at this level. And that is a reflection of what's happening in the economy as a whole. One of the metrics that we track is household debt and credit card debt. Right? So if you look at that, the New York Fed publishes these numbers. Anyone can go and take a look at it online. If you look at those numbers, the household debt is at a historical high. Right now, we are nearing close to $17 trillion, $17.06 trillion for the household debt. So that's at a historically very high levels. And what it says is that we know the inflation, right, is having an impact on the market. And the way that people are able to sustain is they are borrowing money to sustain their lifestyle, which, as everyone knows, it's not sustainable in the long term, right? It's obtainable. You need to take care of your lifestyle, right? For being able to pay for rent, for being able to pay for groceries. All of that is going up. Wage is not increasing at the same rate. So the end result is there is a gap, and currently consumers are filling that gap by borrowing that money. And you can only do that to a certain extent. Once they have reached their credit limit, the economy is going to be in for a wide awakening.
Do you want to comment on any of this, VJ? Like this seems preposterous. This is insane, I find.
Yeah. So the graph, what it shows is you have two numbers that are being tracked here. One is the housing debt, and housing is the way in which a lot of people, the biggest debt that they have is housing, because it's a big purchase, and that signifies the health of the overall economy. You could see what happened, right, leading up to the 2008 crash. We had housing debt increase to hit almost 10 trillion. And after that crash, right, it came down to probably like 8.2 trillion or so, right around 2012. And from then on, it kept increasing and increasing. We have crossed the 2008 numbers, and partly also this is not inflation adjusted, this is raw numbers. So we are over the 2010 levels, which was close to about 10 trillion. So we're 20% higher than that. But look at the non-housing debt, right? Non-housing debt that takes into consideration the credit card debt, and combined together back in 2008 was roughly about 12.4 trillion or so. And now we are at 17 trillion. And this is what consumers hold. And on top of this, you also have the federal government debt, how much the Fed actually owns. And the crazy statistics right now is that every dollar that we pay, about 35 cents goes towards paying the government debt, the Fed debt.
Wow.
That's insane.
That's insane.
Wow. It's when you actually see it, it's pretty, in your face. Hard to dismiss it.
So
Wow.
Maybe Dominic, you can pull up the US debt clock, which is a very popular site.
It's the one that is in New York, right?
Yeah, it's in New York everywhere, right?
Yes.
If you go to parking lots, they have the US debt clock. And if you look at the US debt clock, we are currently at 32 trillion is our national debt. And we are collecting about 4 trillion in revenue, right? So you have $32 trillion in debt, out of which the US government is collecting 4 trillion a year in revenue, which means the remaining is financed. And the interest rate on that, right? If you look at the top left-hand corner, the big number, the 32 trillion, that is the total debt. And then the deficit, which is the difference between what we project and the budget, that's about 2 trillion. And the federal debt to GDP ratio, we have now more than 100%, right? We have more debt than than what the economy is producing. So which is not healthy.
Okay, where on this is our unfunded liabilities? Because let's maybe unpack the unfunded liabilities a little bit, BJ, because there's Medicare, Medicaid, Social Security, right? Those are the unfunded liabilities that oftentimes the Fed does not, or not the Fed, but the Treasury does not even put on their balance sheet as a debt, right? Yeah. So what is the unfunded? Okay, so here's Medicare, Medicaid, 1.6 trillion, 1.3 trillion. So you've got another essentially $3 trillion in unfunded liabilities. And the reason I bring all this up is because I think Stanley Druckenmiller actually did the famed Stanley Druckenmiller. For those of you guys who don't know who he is, he's like one of the most successful investors of our time. He actually did recently, within the last 2 or 3 months, an actual presentation to, I think it was like maybe USC School of Business, and he talked about the importance of, he's like, they are going to have to address the unfunded liability time bomb in the next 5 or 10 to 20 years. That unfunded liabilities are going to have to get slashed. It is an absolute inevitability. So did you hear that at all? Did you watch that one? VJ, I'm curious if you got a chance to watch that.
No, I haven't seen that one.
His presentation on that. Anyways, okay. Yeah, so he talked about that. I think, for anybody listening or watching this, feel free to, Google Stanley Druckenmiller and unfunded liabilities, and it should pop up. But it's stark because of he pretty much issues a warning that if we do not do something about unfunded liabilities, in other words, we can't grow our way out of it. We can't grow our way out of the time bomb that is unfunded liabilities. So anyways, just was really interesting to hear that. So this is, I don't know, man. I mean, I'm a pretty optimistic dude by nature, but looking at this kind of gives me anxiety.
It's quite mesmerizing. I can't stop looking at it. It's like,
oh man. Okay. Well, let's go on to like maybe some, more positive news. So positive news. The only way to really get out of that conundrum, by the way, is for GDP to increase, right? So for GDP to increase, and a lot of people are kind of talking about the fact that, maybe AI is our secret ace in the hole to kind of grow out of this morass of this deadly debt spiral that we're in. So Nvidia, the poster child for AI on Wall Street, announced their financial results for the second quarter in 2024. And their numbers did not disappoint. Record revenue of $13.5 billion, up 88% from first quarter. That's just a little bit of growth. Sounds like a crypto, you guys. That's what I got. Up 100%, doubled from a year previous. And then their data center revenue up of $10 billion, up 141%, or up 171% from a year ago.
Wow.
So VJ, I know you're the big AI guy.
Nvdia
Love all things AI. Well, all you guys. But what do you?
It's not just AI, gaming, crypto, and
True.
AI now.
Yeah, indeed.
But crypto is
self-driving cars. Go on.
That's true. You're right. Absolutely. So lots of applications here. So Nvidia Nvidia earned themselves now. They had to change the FANG designation, right? We no longer call it FANG anymore because of Nvidia. So now what's the acronym for the top stocks in the S&P 500?
FANG with a double N. I don't know.
Yeah.
Anong. Magnificent Seven. There you go. So anyways, who would like to tackle this one first? Don't jump all at once.
Invest in what you use.
I think it's insane how, in a way, Nvidia rebranded itself multiple times throughout its time, because what it started perhaps as a more gaming focused company that did the best video cards for gamers. Then when the crypto boom started happening, it moved into, hey, we're going to do the best video cards for miners. And then they created a whole segment that it was specific for mining. And now, like, they are taking as much advantage as possible with the whole AI things that are happening. And I think even though all of these three things are in a way the same product, because which is what they thrive on, which is creating amazing video graphics card solution and amazing technology solutions. It's really cool to see how they have shaped and reshaped multiple times.
Yeah, they're truly growing with the pace of technology.
Yeah, and I really thought that when Ethereum became proof of stake, and now like all video graphics cards are worth nothing now because you cannot mine Ethereum, it was going to take quite a big hit. But and it did a little bit, but insane how they continue to grow.
Yeah, this
Awesome.
AI boom has been pretty amazing for them, I imagine.
It sounds like they're kind of like the picks and shovels of the kind of the new frontier, right? They're necessary infrastructure inside of this new kind of AI crypto blockchain ecosystem. So in addition to the other use cases you mentioned, Michael, but VJ, something like you were going to say something.
Yeah, so with what Mariana was saying, Nvidia is really good at being able to innovate, right? So any company is about marketing and innovation, right? Peter Drucker 101. All companies are about marketing and innovation. So they have been innovating really well. They've always been in cutting edge of technology. They were early for being able to recognize the Bitcoin mining and being able to produce all the chips that are needed, self-driving cars and being able to produce chips that are needed for that, and the AI boom. So they have always been in cutting edge of technology. There have been other companies also, right? Now, Intel also in the same way they're innovating, but something fundamentally at a cultural level is different. And Dominic, you're right that it is like crypto. If you look at the Nvidia chart, it's almost 10x from last year, right? Last year, if you look at their share price, it's almost up like 950% from last year, from last October. So phenomenal performance so far. In addition, they announced a partnership with Google for being able to sell their AI chipsets through the Google Cloud. They had another partnership with Microsoft for being able to sell their chips using Microsoft Azure Cloud. And the Nvidia chips right now are very hard to obtain, right? The H1000s are, you can auction them off right now. It's difficult to identify, and large companies that are buying these chipsets in bulk, they are not getting a discount. And these cards are going for a premium. So Nvidia is the AI darling. And if you take a step back of the 7 companies that are there, Apple, Google, Microsoft, Facebook, Netflix, Nvidia, and Amazon, right? So those are 7 companies. If you take those 7 companies out of the stock market, then the stock market is at a decline from last year. Even though if you put those 7 companies in, then we are nearing all-time highs. So that's the kind of impact of these 7 companies, not just on the stock market, but the entire industry as such. So if people are looking at the stock market and thinking, oh, like, no, we are pretty close to all-time highs. But if you actually dig in deep, it's close to all-time high because of these 7 companies. And the economy is still at a very challenging time. And we'll have to see how it evolves.
Well, I think the actual number is those 7 stocks. Last time I checked, it was like 20. They represent essentially a quarter of the S&P, right? So, I mean, that's an enormous, enormous concentration of value in 7 stocks, where the S&P 493 represents essentially 75% of the entire index, which is insane. And Nvidia is partly, I use the quotes, to blame for that because of their rapid growth. I mean, I think that the S&P is largely up this year, to your point, VJ, because of this whole AI craze Nvidia has just kind of soaked up the capital, right? So you can see here, it was literally like $347 billion a year ago in market cap to now almost 1.2 trillion. I don't know who's buying it here though. I don't know if you want to be buying this token at 10x after it's 10x, right?
Yeah,
that's pretty crazy.
Yeah, and platforms like Hugging Face are driving individuals to want to have their computers with the latest card so that they can process whatever they're processing. I have 5 Nvidia cards in this room right now beside me. So just think about how many people, regular consumers, are just buying it for gaming, for processing things, for marketing content, all the cool things you can do with AI. Running large language models on their machine, experimenting with all those types of things. I think that's going to keep going because this stuff is so interesting.
Well, let's talk about a company that would have probably liked to have, maybe got in the AI bandwagon a little bit earlier. and that's this company, well, China's largest property developer at risk of default. That's this company called Country Garden. On the surface, you'd think it was a United States-based company with a name like that. I didn't know that, maybe there. Like, I didn't know that there was companies named Country Garden in China. That just shows what I know. But they essentially seriously warned that they're on the brink of default, as it reported a staggering loss of almost $7 billion. That's not 7 million, 7 billion. And what's that? 32 years, VJ, in seconds, right? So that's a well, in billions, 7 times that, even longer. For the first half of the year, deepening a real estate crisis that threatens to unravel the country's already fragile economy. So the saga of a company previously seen as one of China's safest property developers and a pillar of the industry, is the latest example of how real estate, which fueled the country's economic boom, could prove its Achilles heel. As well, an American, I feel like I've seen this story before. I actually just watched The Big Short for probably the 15th time the other night. It was good to watch that again. So I'm feeling like my reticular activating system's picking up on stuff now. Apparently, China is next. But what do you guys? What do you guys think about this?
So with China and real estate, it's particularly interesting. Chinese citizens, they cannot purchase stocks in their country, right? I don't remember exactly how it works, but the only way that you can invest money if you're Chinese is actually buying property. I know it sounds like a little contradictory because it's like, hey, that's capitalism. But yeah, the only way that they can do that is buying property. It really represents a huge percent of the investments of the Chinese citizens' property. So it's quite shocking to see these things. Not only is this developer the one that is failed today, but I remember I think last year or 2 years ago, Evergrande, which was then the second largest real estate developer, also was like at the brink of failure.
I think you're exactly right, Mariano. You pretty much nailed it. Evergrande last year or 2 years ago, and now Country Garden. And I just saw also an article that, it has debts of more than $200 billion, and it's missed interest payments on 2 loans. So that's pretty staggering. That's not a good thing at all. So anybody else have any comments on this? And I guess moreover, what does this mean for the rest of the world? And macro, like, what does it mean for crypto? Like, is this one of those things where if China sneezes, the rest of the world gets a cold? Kind of like what happened back in 2008, where we pretty much had to come in and save the financial economy and socialize the losses to all the citizens of the US. So what does this mean for the rest of the world?
Let's break it down into 2 phases. First is, what does it mean for investors in this company? I heard a cat meow somewhere in the background.
That's what it means.
So because of the, we had in 2021, the Evergrande group, and what is the other one? The Fantasia Holdings, Sunac. There are like a bunch of these Chinese company. They're all facing similar issues, right? Calling it the 2021 to 2023, this has been continuing to happen, is the property builders, people who are involved in the marketing of the property in China, we are having a crisis. And we can go into the details of the background of what happens in the 2000s of what China did. They had a property bubble that was growing, and the average land value tripled right around, I think when we were having the crisis here in the US around 2008. So it tripled by around 2008 to 2009. And 2011 is when the property land value started slowing down in China compared to the rest of the world that had a big drop in around 2008 or so. So because of that, they changed some of the regulations, and what we are seeing now is they had very lax lending policies for especially property developers. And this is the impact of that. But for people who had invested in these property companies in China, it's a challenging situation where they have stopped paying all their the interest payments. So many people, probably in the millions, who have invested in these companies don't have a way of getting a return on their investments, which were they were primarily using it as a dividend, right? Like they were all interest payments that people were getting, and they were using that for being able to fund their lifestyle. Now they won't be able to do that. And China is the manufacturing plant of the world, right? And if there are any issues there, we're going to see the impact of it ripple throughout the world, because we are living in such a global village these days.
Yeah, I think you're exactly right about that. And just another extension of that, I know we mentioned Evergrande. It actually continues to go on here, saying that Evergrande is currently still trying to restructure more than $340 billion that it owes. They actually finally resumed trading on the Hong Kong stock market after it was suspended for 17 months. So they pretty much halted trading for 17 months on Evergrande, and now just allowed people to trade on it. For some reason, I think that this whole collapse of Country Garden, a competitor, is not going to reflect well on Evergrande stock price. Just a guess, but good thing I'm not hitting the bid button on the Hang Seng. So, but Vijay, just to kind of put a bow on what you were talking about, you're right. This could have an impact. Especially from a manufacturing perspective, right? We print US dollars and we send them over to China in exchange for, $3.40 items on Amazon. So if all of a sudden there is a dearth of those items being manufactured, then that could definitely disrupt supply chain. So anybody else have any comments on this?
Yeah, people, because we have a recency bias, which means that we pay more attention to something that happened recently than something that happened like 10 years ago, right? That's a human psychology. And because of our recency bias, and because of how we had the whole COVID spread from China, so people are thinking, oh my God, right? Is it going to be another situation where something starts in China is going to have a global impact? My personal take on it is that I think this is not going to have an impact beyond China, because the exposure for this is being low. Right now, people have had enough time to react. The Evergrande thing happened back in 2000, 2001. So people have pulled out most of non-Chinese investment away from China. So my prediction is that the impact globally is going to be very minimal to low. And I don't think it's going to be a situation where what happened with the COVID thing, or even in the financial market earlier this year, what happened with the failure of SVB Bank, that created like a ripple effect throughout the economy. I don't think it's going to be anywhere close to that.
Excellent. Well, that's highly encouraging. We got enough problems to deal with here in the US and enough things to monitor. So any final parting shots for everybody as we put a bow on this one, episode 9 of the BitBrain Podcast?
Nice.
Michael, nice pussy, dude.
Oh, yeah. Don't get us banned from YouTube.
Yeah, dude. Can't do that. We're getting demonetized now.
No,
Right.
I'm talking about your pussycat.
Yeah.
That you are petting. Yeah.
Yeah, there she is. There she goes.
I'm glad that you were more descriptive in your terminology there, BJ.
What's the name?
Her name's Chipmunk.
That's cute.
That's an original name.
Yeah.
She'd probably love to see a few chipmunks. I wonder what.
Oh yeah, she was always looking at chipmunks.
Yeah, that's awesome. Good stuff. Well, thanks everybody. Be sure to like, comment, subscribe, give us some feedback. As always, let us know how we're doing and how we can improve and make it better for you, the listener and the viewer. So guys, have a great week, everyone. We'll see you next week.
Take care, everyone.